Hi guys, welcome to my channel. So let me share with you a story that happened. I have a WhatsApp group page where I share my trading ideas with the participants of the group, and then something interesting happened. I gave them a trade idea. Of course, when I'm placing trades, I tell them what I'm doing, exactly what I'm doing in the markets. So they took the trades and then they got to a point I asked everyone to close the trades with immediate effect. And then after we had done that, guess what happened? The market just reversed. The market was going up, so we're buying. So some of them were a bit surprised and they were like, how were you able to know this was what's going to happen in the markets? Well, I was able to know because I use the ATR. But first, we are going to talk about the trend line. If you are new on this channel and you like my content, then I'll urge you to click on the subscribe button and click on the notification button so you don't miss out on future videos. So today we are talking about the trend line and then the average true range, which is called what? The ATR. Of course, next week I'm going to talk about the currency strength index. I know many of you are waiting to see how I use that indicator. Yes, so without wasting much time, let's hop right into the screens and then see how I use these indicators. I'm going to talk briefly about the trend line and then we move straight into the ATR because the ATR is much more important for my strategy than the trend line. So let's get right into it. So the trend line is very simple. I mean, we don't need to waste much time on it. If you want to know how the trend line works, you can just Google it out and you know how to use it. It's basically identifying swings, two or more swings, and then connecting a line, a straight line, or using a straight line, plotting a straight line that's going to connect the swings. So if you're able to connect two swings, then you have a valid trend line, and you drag or you extend the line beyond the two swings just straight. So if you are able to plot or if you're able to connect that line to the third swing, then it means that the third swing obeyed the trend line. When we say obeys the trend line, it means that when price hits the trend line, it reversed. Then we have a valid trend line. It's used to identify support and resistance areas. If it breaks the trend line downwards, then we are looking for a sell. If it breaks the trend line, or if it doesn't break the trend line and it bounces off, then it means it is a key resistance or support area, and we can hop in as traders to milk the market or make some money. Now let's talk about the average true range. The average true range is one of the most dear indicators that I have. It's very dear to me because it helps me measure volatility. Think about volatility like you would fire. Fire is a very good servant, but a very bad master. We can use fire to cook. We can use fire. In fact, fire is able to move combustion engines. So it's the same way with volatility. Without volatility, you are not going to blow your account. And without volatility, you are also not going to make money. So you see the analogy with fire and then volatility. So as traders, what do? We harness the power of volatility to achieve our aim or our target. And what targets do we have? Money, l'argent. So your job as a financial trader or as a Forex trader is to identify volatility, have control over volatility, use volatility to increase the money in your account, increase your equity. So without wasting much time, let's go straight into how I use ATR or the average true range. I have a way of calculating it myself, and I try to identify what the historical trend has been. So all what I need, or I'm looking out for, is to identify how many pips that particular asset moves in a given period. So if, let's say, pound USD moves 500 pips before I entered my trade, let's say it was a buy trade, it had already moved 400 pips. It means that it has only 100 pips to go. So when I buy pound USD, my take profit is just going to be 100 pips. I'm not going to set 200 pips or 300 pips, because the market or the ATR has shown me that historically it's not likely to move beyond the 500 pip. Anyway, thank you for watching. If you learned something, I mean, the formulas I use here is something I can share with you. I mean, it's just that I might not have the time to walk you through the steps, but if you are good in Excel, then you don't even need my formula. You just can plot it yourself. If you have any questions, put it in the comment section. I'll be glad to respond to all of them. Thank you so much for watching, and do have a nice day. Bye.